Hello, everyone. Arthur, super happy to have you here for this talk.
Thanks for having me.
Welcome. How are you doing, dude?
Excellent. I just finished a week of skiing in Niseko, Japan, and I left and it was just dumping powder. So I can't wait to get back there in 2 weeks' time to see what more things to play with on the resort.
Okay, you're going back. I see, I see. Well, today we're going to have a really cool conversation together. And for everybody that is here, Arthur and I have met each other a few times during the last year. And I was completely magnetized by him and how he speaks, how he writes. And it was like, I told him, I really want to bring you here so people get to know you a little bit more about you and about maybe why you've done things that you've done in the past and how your passion, your mind all connects, into the heart of a builder, which is what you are. So
Cool.
we're
I'm
very
happy.
excited.
Let's do
Okay.
it.
So the beginning, to give a little bit of context, Arthur, where are you from originally?
I'm from a small town called Buffalo, New York, and it's basically on the border of Canada near the Great Lakes, so Lake Erie. So I was born there. I spent a bunch of time in Detroit, Michigan, about 5 hours away, and then went to university, then went to Asia. So I basically spent almost half my life in Hong Kong and Singapore.
Okay. And when you grew up there, what did you study or what did you thought you were going to become when you grew up?
So Buffalo's, if you think about a major city like New York City, which is about 8 hours drive away, Buffalo is like nothing like that. It's boring as fuck. It's a post-industrial town. Very nice. People are very nice. It's not a dangerous place, but very, very boring for somebody who wanted to see the world. And so I, went to school, got good enough grades, got into university, and decided that I wanted to do something business related. Finance, didn't really know what that meant when I got to university. Like I had no idea what an investment bank was or a trading desk or all that kind of stuff. Kind of learned that along the way. I just knew that finance appealed to me because you know at a very selfish um, interpretation, you don't actually do a whole lot, and you're able to make a decent amount of money. So it's like that
Okay.
sounds like a great profession for me. And it helps that I like economics and that kind of stuff. But at the end of the day, you don't do a whole lot. You're able to, save a lot of money. And so I thought, okay, let me try this out.
Okay. And the first job out of university was in TriFi, or how do you start it? How do you get your career started?
So thankfully at my university, a lot of the top banks and hedge funds and all that kind of stuff, they would come on campus and interview people. So we had the exposure to a lot of the largest banks. I did one summer internship at JP Morgan in New York between my sophomore and junior summer. Then I finagled an internship all the way in Hong Kong and Singapore at Deutsche Bank.
Nice.
And then I joined Deutsche Bank full time in 2008 after I graduated.
Okay. And then when did you like the crypto bug start biting you? When did you saw like, maybe this is a shift that I can make?
So I wish I had known about crypto in 2008. Obviously, everybody did. But I didn't really hear about it until early in 2013 when I was working at Citibank. And the best thing that ever happened to me financially was I got fired from my job in June of 2013 at Citibank. And I knew that I didn't want to stay in TradFi because TradFi after the Lehman collapse was a different TradFi than before that, obviously. The pay went down, the amount of rules and regulations went up. It just wasn't a very fun place to work. Like all the great stories you read about and you hear about from people who were working in the, 80s and 90s, wasn't really much innovation happening. So I thought, okay, well, if I stay doing this job, then this is going to be my life. And I wasn't really happy with that. So I need to do something else. And thankfully, crypto came along. I heard about the Bitcoin price spike to $250 back then. I didn't have time to investigate it. I think it was in April 2013. Came back after I lost my job and I was like, oh, what's this Bitcoin thing? I read the white paper and I was like, wow, this really makes a lot of sense. I've been a gold bug since like 2011. So it kind of resonated with my worldview on central banks and money printing and how the banking system's fucked and all that. So I kind of bought into all that. And then I went deep on it. I wanted to know every place I could trade Bitcoin. How do you go long? How do you go short? Is there margin trading? Are there options? Are there futures? And I opened up accounts at every exchange that I could. I researched all the different ways you could trade back in 2013. And sort of that's how I got into crypto at the time. And I guess fell in love with the trading, the people that I met on the internet and just the crazy types of trades that you could do in crypto back then when the spreads were, I could point and click and make 20% doing arbitrage. You could do cash and carry basis trades and make 200% per annum. It was just nuts, the kind of stuff that you could do back in 2013. And that's sort of what got me hooked on crypto and Bitcoin.
And when did the founder part come to fruition again? When did you decide, I want to start something new?
So I was making decent money, paying my rent, being able to go out to nice dinners still, not working a full-time job. And as well, as a trader and someone who's worked in a bank, you know that at best you're mediocre, you're average. And so if there's a really good opportunity, it's not going to last forever. So being able to point and click and make 20%, that's just not going to last forever. So if I wanted to stay in the crypto ecosystem, I needed to do a real business. The only thing I know how to do is trade derivatives. There was a derivatives exchange at the time called ICBit. It was run by two anonymous, I believe they're Russian dudes they were in the Caribbean. And I was just frustrated that their platform wasn't progressing enough because me and the other traders were making a lot of money doing very simple arbitrage trades. We're like, okay, well, we can make even more money if these guys improve the platform, add new products, do better marketing, get more people here so we can trade larger and larger sizes. And so I said, well, fuck it. I think I can do it better than these guys. And so I went out in my network and I thankfully and luckily found Ben Dilo and Sam Reed, my other two technical co-founders. And I pitched them this idea of fuck Bitcoin spot. We need to do Bitcoin derivative. That's going to be the biggest thing in crypto trading. Let's build a derivatives only exchange, Bitcoin only exchange. I convinced them that's what we should do. And we started building in early 2014, BitMEX.
Okay, this is amazing. So now that the first time that you're pitching this idea, what was the reaction from people? And how long it took for them to either understand or to get on board?
So in 2014, if you remember, or maybe some of you were trading at the time, MT Gox went bankrupt. At the time, I believe it was around $500 million worth of Bitcoin that they lost, Bitcoin and fiat. Massive scandal, obviously, like completely mismanaged. The MT Gox was about 80 or 90% of all trading volume in crypto. They had the whole thing on lock, yet they fucked up the accounting and couldn't do it right. And they went bankrupt. And so trust in centralized exchanges plummeted. Not only is Bitcoin, this is 2013, this is before, you have Larry Fink on CNBC talking about how Bitcoin's a store of value and like all these TradFi Muppets doing this. This is pure like magic internet money, people looking all strange on the internet and like Bitcoin talk forums. It's definitely like that. So if you're the largest exchange goes under, people already thought Bitcoin's a scam. And now you have this dude over in Tokyo who people thought was complete, nincompoop, just losing all this money. Like, I don't want anything to do with Bitcoin. And I certainly don't want anything to do with an exchange. And so thankfully, from the outset, I wanted to create a business that had customers that paid us money. So I wasn't looking for VC funding to be able to build the thing. Ben, Sam, and I all had other things that were able to bring in some money so we could support ourselves financially before the thing started making money. But in the event that I ever talked to anyone about possibly investing or supporting us, they were like, okay, number one, Bitcoin is so risky on a spot basis. How are you going to do derivatives on Bitcoin? How do you add leverage to this thing? And you want to do an exchange? Didn't MT Gox just fail? Why would you ever want to get into the exchange game? You're just going to get hacked, or you're going to, steal the money, or it's not going to be a good business. So there was no appetite for funding any sort of businesses. And if you remember at the time, if any of us were around, the VC mindset, and I routinely like to call VC investor dumb Muppets because most of them are. There's, top 5% are very, very good, and everyone else is just dog shit. Everybody believed that the blockchain technology was very valuable, but this thing called Bitcoin, we don't want anything to do with that. So there's a whole theme called we invest in blockchain, not Bitcoin, which is completely bullshit. If you actually understand the fundamentals of what this actually is, you need the token for the public blockchain to work. In any case, they weren't investing in companies that were directly dealing in crypto, especially crypto trading. So there was just no appetite for funding for what we were trying to do.
So you said something very interesting. So after the debacle of MROX, now there's no trust, there's no appetite for exchanges. Everybody's telling you, dude, that is a bad idea. We've gone through the same cycle a few times. So how do you now swim upstream? Like, no, I'm gonna fucking do this. I'm gonna do it right. And even though others have failed, I will succeed where others failed.
So I had a firm belief that derivatives, because of how they've evolved in TradFi, spot derivatives, FX derivatives, and interest rate derivatives, they trade multiples of what spot anything trades, right? The Chicago Mercantile Exchange is probably the most valuable exchange in the world, and they don't touch any sort of spot trading. They only do derivatives. And I look at Bitcoin in a certain way as another financial asset, and therefore the microstructure at a macro level will kind of
Hmm.
develop in the same way. You have spot, and then there's going to be derivatives. Derivatives is where you make all the money. If you're at an investment bank, if you're on the cash desk, meaning dealing in spot anything, whether that's stocks, bonds, foreign exchange, you make way less than the person doing derivatives. It's way more complicated. There's leverage. There's way more ways to make money for the bank, and the clients are willing to pay you more to offer them leverage and sort of nonlinear exposures. So I was 100% confident that Bitcoin was a force to be reckoned with, in that it was a very novel technology and was going to completely change, the economics, politics, how we interact as humans. It's going to be very well traded, and derivatives is going to be massive. The question is whether our flavor of derivatives survives long enough to see the bull market through. And so that was my whole mindset: is let's survive. What do we have to do? Meet the client where they're at, deliver the product that they want, and let's just make sure that we are sticking around for when Bitcoin and Bitcoin trading is a thing again.
Okay. And because this session is partially about storytelling, so now you have to tell a story that people are going to buy into it. What do you think they were buying into? Your passion, your knowledge, you as a founder, the hypothesis of the project that you were building, more about the blockchain, Bitcoin, and all the ecosystem backdrop? What do you think was the tantalizing element, for people to get on board?
So back then, 2014, 2015, there were other futures exchanges out at the time. There were a few very successful ones in China. Some of them are still around today, like OKCoin, which is now OKEX. And they were offering a very, very high leverage trading model for futures contracts. We had a much lower leverage trading model because we had a different margining system. So, but we thought it was better, but the clients didn't agree with us because they weren't trading with us. So we'll say, fuck it. Well, if this is what the clients want, let's just do it better. So the Chinese exchanges were doing 20x leverage at the time. We went to 100x leverage. And that was, what started the ball rolling. We kind of caught a little bit of a bull market in the fall of 2015, but it really was our technical ability to offer more leverage than any other platform, and as the exchange stay solvent, because there are lots of derivatives exchanges that went under because the founder didn't understand the math, and so they built the wrong thing. And so once you got super volatile movements, the product broke down and they started losing money as the exchange, which should never, ever happen. You should never lose money as the exchange. Yes, the clients make and lose money all the time, but the exchange and how it's structured and operated should never, ever be at risk.
Okay. And I have here one of the questions is, so you mentioned that you were identifying what other users were interested on, and then you started serving a way, you changed your model to serve what they wanted. Then you found, I would say, a higher product market fit, and that was part of your uptick?
Yes.
Okay, that's great. There will be a lot of success about BitMEX and a lot of the things that you guys did, and in a way, how you revolutionized some of the perp exchanges. And a lot has been talked about that. But I wanted to give the founders a way for them to have a little bit of like the technical advice or tactical advice. What would you say that is like the three main things that you would recommend someone or yourself if you were back there and you were like, okay, this is what is going to happen now, What three main advice would you give Arthur as you were building BitMEX?
The number one thing is make better hiring decisions. That's
Okay.
probably, so if you do make product market fit, you start making a lot of money, you're obviously going to be short staffed because, unless you're coming at this with oodles and oodles of money of VC funding, you don't have a lot of money. And so you're doing a lot of things yourself. And so you start trying to hire people to do the different functions that all the co-founders are doing. But you needed somebody yesterday or last week, not today. And that leads to a situation where you start compromising on the rigor that you interview people with. And so I found that as we grew from a company, so we had about 10 people in 2017. By 2018, we had over 100. And we have
Wow,
made a
so
lot
fast.
of terrible hires because we've prioritized speed over, going through the motion of creating a proper job description, interviewing people on exactly did they have the experience that meets what you actually want them to do, spending the time to do this. Like there's a book called, I think it's called The Who Method. It's
Okay.
written by this woman, and she goes very in depth on how to do proper interviews. Now, if you follow her framework to the letter, it might take you, you know, 5 to 10 hours of interviewing a candidate before you're ready to make the decision on whether or not this person is suitable for the job. That's a lot of time if you have a lot of other things to do to be spending on one candidate for a position. But it works, and you get much
Okay.
quality hires who are better fit, and you don't have the costs in terms of time and money and politics when you have to let somebody go who wasn't a right fit for the job. And maybe it was that you didn't interview them properly. So I'd say the number one thing is, do make better hiring decisions. Something I think that we did well and I continue to advise people to do is listen to your customers. I don't think a lot of people do that. I think they listen to their venture capital people versus their customers because they want to sell equity or tokens and raise money versus sell a product that actually earns revenue for the company. And back when we were in the trenches, me and my co-founders, we answered every single support ticket ourselves. So we were very knowledgeable about the issues and the deficiencies of our platform because we heard it every day. And if there was an issue that kept coming up, then we would deploy either a process or technology to fix it because it was our time that we were saving because we were the ones sitting there answering these emails day in and day out. And that's where the perpetual swap came from. It was an idea that came from our frustration at dealing with questions about how futures contracts work on our platform and the complaints that we were getting that people thought that we were doing something shady because futures contracts expired and the price was different than the spot price. So we thought, okay, can we create a product that has no expiry date and mimics the trading of margin trading so that our customers stop emailing us these questions and they just trade. So yeah, very keen connection to your customers. Yes, the VCs are very important because they have money, but you can be, I mean, Adam Newman's a bad example because he's made $1 billion for himself by taking investors' money. But at the end of the day, right, WeWorks is bankrupt. All these companies raise a bunch of money. No one's really paying for their product because they're optimizing for what they think a guy or gal in Silicon Valley or in Beijing or, down somewhere in Singapore is going to fund their company versus what does my customer actually want?
Okay, this is super useful. I will say myself, I've also been into this hiring problem or hiring debacle because there is so many opportunities that you see around that you want to captivate as much of many of them, because you see free money everywhere. So you're like, well, I rather hire someone, even if it's not the right person, to be able to at least tackle this opportunity, and it ends up biting me in the long run. And maybe I should
Yeah.
have not just try to capture all of them, Maybe the Pokemon song of capture all of them was not the right thing to do here. So we have a point here, there was I would say the downfall of Arthur and a lot of the things that you went through, but I am not that interested in that part. I'm interested in the comeback story. Because now that you had, let's say you were, in my opinion, one of the jewels of the crown in North America, there was a lot of things that you were doing that nobody else was doing, and now you have to come back. How do you you had one moment, the Eye of a Tiger montage where you see yourself just like, okay, I'm gonna get strong, Rocky starts playing and you do the comeback story, or how do you went through that yourself?
I love crypto, and I don't think it was ever a comeback story. It's just taking your knocks and dealing with it, right? If this is really a movement where we're trying to revolutionize finance, economics, how we interface with ourselves, the governments, all that kind of stuff, like people are going to go through things. It's not like we're creating, a better pair of skis. We're creating a new financial system, and we want to put a lot of people who are the most powerful people in the world out of business because we think we can create a better system. And so there's going to be issues. People are going to get hurt. It's not going to be a smooth process. And so I think recognizing that, then you sort of just put everything in context. It's like, well, what did you think was going to happen? Did you think we're just going to create a new financial system and say we're going to take money from the state and nothing was going to happen? No, if you deal with it, you move on and you try to, continue to give, whether it's your customers or your investors or the people who follow you on social media, the truth and the best service that you can. And at some point, they might not appreciate it, and the next point they might. So I think it's more of internal consistency about what you're doing and being able to take the bad with the good.
I would say, is this part of the reasons why you started doing these amazing blogs that you do?
So I've always written stuff. I think I started writing a newsletter back in maybe it was 2015.
Okay.
Essentially, it's like, okay, well, we we need to have more exposure. Let me just write some shit and see if we can get more exposure to our exchange by talking about markets and what I'm seeing. So some of my older blog posts are on the blog.bitmex.com, and so I've sort of moved less in a technical market trading sense. So a lot of that stuff back in the day were like trades that I saw, how to make a money doing this or that specific thing with BitMEX derivatives and different types of arbitrage opportunities that I saw. And so it's evolved more into a sort of macro political thing because now the types of trading and investments that I do are obviously much larger, and I don't want to sit at my computer all day trading. So I want to try to do different types of expressions to in my investment portfolio, which leads me to writing these essays. And these essays, half of it's just for myself. If I can put down a coherent essay about an investment theme that makes sense, and I've put it out there in the public, and I get judged by everybody, everyone's free to offer their comments on social media or Medium or Substack or sending me Telegram messages or whatever. Like if I was putting out complete garbage and my logic didn't make sense, I would get called out. And I hope I get called out because at the end of the day, that's going to help me not make as many investing mistakes. And if I think I had a good idea and I hear a lot of good feedback that, that doesn't make any fucking sense, Arthur, this example doesn't work because of that, then I've just saved myself a lot of money. So I view this writing as very cathartic, and I think I'm getting better over time. I like doing it, and I'm glad that people appreciate it.
I have so many questions about this, and obviously you're now exposing it's like a whole entry door into your brain. Maybe it's not a two-way door yet, but I get to learn so much about you and how you see the world. Is this just to try to convince people that your views or your ideas or just put something in their mind? Is this for you, just like you said, is your ego way, like, oh, I just want to do it for my own self-amusement? Because you spend a lot of energy doing it. What do you get out of it?
I like being right. It's fun.
Okay.
So, and me and my friends, we like arguing about this stuff. Like, no, I don't agree with everything they say. And I read a lot of other very, very smart individuals, some of whom I crib a lot of what they say and put it in my own vernacular that's interesting to my audience. But at the end of the day, I want to try to forecast the future and see how I do. And I think it's very rewarding when you can do it, and or when people come up to say, "Hey, you made me think in a different way. I might not agree with what you said, but I changed the way I was going to approach this particular situation because I thought in a different way." And that's all I want to do. And then, another angle is I want people to hold crypto. I want this movement to be successful. And if I can plant more mind virus tentacles in more minds around the world, then the whole movement is going to be more successful.
Okay. So I have another maybe subject to help founders with. So you became so public that in a way, any business that now you're part of or you were part of it, now it's an Arthur business. So how do you, let's say, adapt between the brand of the business, who you are as a person, the brand that you portray to be, and the connectivity between all of those things?
Quality, I think, is at the end of the day. So again, it's not just me. I have a team of people. Akshat Vaidya is a guy who runs the investment book for Maelstrom, my family office. And thankfully, we don't have any other LPs, so it's just my money. Do whatever we want. We don't have to answer to anybody. So we can invest in things that we think are going to make money on our time frame. So we're very short-term focused investors. Next 1 or 2 years is when we're trying to realize returns. But at the end of the day, we want to invest in quality. We want to advise on quality and invest in quality. And we don't have other considerations like, oh, what is someone going to think about this or that? I mean, I'm invested in a sex doll company. I don't give a fuck what you think about that, but I know that the shit makes money. So like it's being able to be free with how you think and how you invest and how you express yourself, because the only person I have to answer to is
Mhm.
myself versus a bunch of other people who have, differing opinions. And that allows us to invest in the things we want to invest in.
So I'm sure that there is some other guy saying, okay, Arthur, that sounds really cool. And it's like a good wisdom cookie, but you first have to be successful to get away with this. And maybe you have to be the smartest guy in many rooms to get away with it. I'm just a normal dude. I'm going to start writing my thoughts. I know that I'm going to just be myself. And maybe that is not engaging enough, or maybe I don't feel enough secure about how I am or how like I am. how do you think they go about it? Because they still have to storytell, you know? You're constantly selling when you're the founder of a company.
We have to sell yourself first because as a founder, you're going to go through a lot of no. Everyone's going to tell you no. Um, and if everyone's telling you yes, because you've, for whatever reason, and you raise a bunch of money, well, you've probably sold a lot of your company. So then who are you actually working for? So it's kind of a double-edged sword there. If you can sell yourself on the idea, well, everyone around you is telling you you're stupid. Why are you doing this? Why'd you give up that great job? Why'd you drop out of university to do this? Oh, isn't that a scam? Right? And if you can't have an internal dialogue with yourself and convince yourself and be able to shut out all that noise. And maybe the way you do that is by writing your thoughts. And who cares if anyone reads it? It's just for you. And you have to convince yourself first. And then the accolades from the outside world will come after that. But if you can't convince yourself as to this idea is correct or why you're doing this business when everyone tells you that you shouldn't, then there's no way you're going to succeed.
Okay. Dan Tran just asked a question that I think is very pointedly here. Do you practice yourself or how do you become or develop, to become a good salesperson? You get on the mirror and it's like, hey, like in the movies, you're the best wide receiver that ever existed, And
I think
how do you do
everyone's
it?
got their own ways of doing it. I've been doing public speaking stuff for a very long time, and so I'm comfortable on stage. Some people are definitely afraid of it. They fucking hate it, right? So it's just doing it and accepting feedback. So if you get off stage and you ask them, okay, well, what do you think? And they, well, actually, you were looking off center here, there's too many you're speaking too fast. And so the people who really progress are then, okay, thank you. I'm going to take that feedback and internalize it and get better. The people who don't, like, no, 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 I wasn't doing that. No, you didn't hear it right. Like, no, 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 I'm not like that. Right. So if you can't take feedback from the people who are in the audience or, trying to buy your product, then you're never going to get any better because no one is born an amazing public speaker, salesperson, or whatever. They practice at it and they're able to take feedback, incorporate that feedback from people who are well-meaning but are extremely critical.
Okay. We have a few pre-agreed questions, but I have one more thing to you. So I've met, I would say, a kaleidoscopic version of Arthur. I have seen you at a conference and you're like the Rolling Stones are rolling into the party and everybody's like, holy shit, it's Arthur. And you're like, just cool boy, high-fiving fun boys. Then I've seen a very thoughtful and kind Arthur. That is the one that I've seen when you're even right now here with us. Are you all these versions? Do you have a masquerade that allows you just to interface with so many people? Like, how do you go about all these different versions of you that you show?
So I mean, when you're on stage, you're acting. It's fun. I like doing it.
Okay.
It's fun for me, and I think so. I don't mind, dialing up the energy because again, I view it as okay. Well, especially at conferences, these people that pay a lot of money to be here to hear things that people are saying. So if I'm being privileged enough to be on stage, then at least I should approach it with gratitude that they're here and try to offer them a product that they came here to see. Otherwise, like, what am I doing here? Just don't come if you don't want to, accept this sort of an engagement. And then, when you see people out in the street and, they want to take selfies or whatever, like at the end of the day, I run a client business. I've got to where I am because people logged onto my platform, used my product, paid me fees. So who am I to say that I can't take a selfie with somebody or give somebody a high five? Because we're in the client business. Every business is a client business. And so I think you should be grateful that people want to support you and support your products at the end of the day. And if you approach it in that way, then it's easy. It doesn't matter. Who cares, right? These people are there showing you, affection and love, and why not reciprocate that?
Do you feel that there's an element of performative? And like you said, like I need to put on a show because this is also what they're expecting, is fulfilling expectations.
For sure. And it's fun. Again, if going on stage, you wouldn't, it's not like, Taylor Swift. She likes being a performer because, I'm assuming, I never met her, because she gets on stage in front of hundreds of thousands of people, right? You have to like that. And some very successful co-founders hate that, and that's not their role, right? And that doesn't mean that they're any worse at their job, but just that's not what they're there to do.
Okay. I have one more question and then we go with this. I have been around some of these very strong figures like yourself in other companies, and sometimes it's hard for other A players to grow around you because you're so strong. How do you go about that? About your strength to be used to create other strength around you and not to diminish it?
I'm really lazy. So when you're in, if
Okay.
if I would love if everyone is an A player, then at the end of the day, your job as a manager is to make them shine, right? And in the investment game, if you own the majority of a percentage of something and you're able to, they make 5 or 10%, whatever it is, right? But they're happy with that and they're able to perform, support them, right? It's if you make it about the people below you and doing whatever you can as a manager to support their growth, then they're going to amplify you and make you way more money than you ever would have made, and you do less work. So it's not about you. It's about how do you, enable the people who are directly working for you to be as successful as they can and as fulfilled as they can. And, of course, at some point, maybe they're going to go off and say, I want to do this something else on my own. But then you have that network of people who are really good at what they do. And when you call in a favor or something, you have people around the industry that respect you and will help you out or do another business venture with you or something, right? It's a very, very long, road. I'm actually working with people that I was an intern for, in 2008, and now I'm doing business with them in a completely different context. If they had been a cunt to me back then, think of what I would feel about them right now. So it's a
Absolutely.
long game. Don't just believe because you're low or high or whatever the relative positions are that won't reverse in the future. And so I think treat everybody with respect.
Okay, Arthur. So now you're 20 years old right now. Imagine you know what you know right now, and you have this infinite amount of creative energy that we all had when we were 20. What would you be working on right now?
I would be working on DeFi, trying to create new financial primitives on public blockchain. So obviously, I'm a big ETH maxi. I do own some Solana, but at the end of the day, that's the public blockchain I think is going to succeed. But that doesn't necessarily mean it's going to be the case. But I think this is the most exciting part of the world right now. With your imagination and your creativity and the problems that you see around you in all facets of the human civilization experience, you were able to build things in a permissionless fashion to try to change those. And this is the first time in human history that 1, 2, 3 person teams can create projects like Uniswap or Compound or Aave or some of these game-changing ways of organizing financial infrastructure across the internet is literally, a handful of people. Whereas you look at a JP Morgan, a Goldman Sachs, Santander, and these large banks, they're like 100,000 person organizations because that's how you had to do it back in the day. We don't need to do it like that anymore. And so that's why it's so exciting. If I was back then 20 years old, I'd learn Solidity, learn Rust, learn about finance and economics, and then fucking experiment and see what I could create.
Awesome, awesome. Well, this is great. We're gonna go with the Q&A. I think we have first question here. Look. Okay, we're introducing Calvin. Hello, Calvin.
Hey Arthur, which
Hi.
question do you guys want me to ask? I know I dropped a few in the chat.
I think you have one for options. Which one are you more excited about of the questions that you wrote?
Let's start with the options one. Hey Arthur, I guess obviously I think you had a really nice anecdote about hearing like the pain points that users had in dealing with dated expiries. With regards to options, we see a lot of issues with users not really knowing, all the decision making they need to do with, what strike prices, which expiries to deal with options. Do you think there's something that can be done on the options side as well, similar to how you saw something back then when you started pushing down the perps direction?
So the biggest issue, not necessarily a problem, but the fundamental thing I think options and crypto need to solve is the expensiveness of volatility. And I say that because by creating the perpetual swap and that sort of blossoming of that market, I can put down a little bit of money. I don't risk the rest of my account because I put on sort of an isolated margin position. And I can go long with 100x leverage or 200x leverage, whatever my platform offers. And it's almost like a short-term option. My downside is limited to my initial capital. My upside is unlimited up to the value of the insurance fund of the platform that I'm using. And so that mimics an option. In the traditional TradFi world, you don't have that option. You don't have that situation because when you place a bet on a margin trading platform or a derivatives platform, you place your entire financial net worth at risk. And so you're not going to, gamble as much or trade as much versus in crypto where I know the maximum I can lose is what I put in. And I get this high leverage, which is very akin to an option. And the problem with options is because I have to pay for the implied volatility of crypto, which is extremely high, the premiums are very, very expensive. And so if I look at the gearing or leverage embedded in an option versus trading a Delta One perp swap, it almost always makes sense to trade the perp swap, unless I have some sort of funky structure that I want to put in. So I think the challenge for anyone in DeFi is, how do I create a very tradable optionality product that is more fun or gives me better leverage or different types of exposure than if I just went and traded a perp swap? Because the perp swaps are already very, very liquid. Options are much harder, as you spoke about. There's expiry, there's all these nonlinear Greeks that you have to understand to really trade them well. So I think it's on the people building these things to not approach options from, let me just take the technical definition of what an option is in the Hull derivatives book and try to recreate that on DeFi. Is, come at from what the problem set that the DeFi user faces and try to give them a better experience than trading perp swaps in different types of exposures. So that's how I would frame the problem, not more so than the expiry. So I think that comes afterwards. It's more at a fundamental level of why even trade options if I have 100x leverage perp swap.
Awesome. Thanks, Arthur. I think Jay also saw my other question. I guess
Yep.
the other one was with regards to your point about early stage, that you chose something that wasn't reliant on needing external capital because the fees were fee generating, and you guys, as three co-founders, had some ways to pay the bills while you were starting it up. Do you think that BitMEX would have had a different mindset or actually done worse had it had the maybe comfort of a cushy seed round?
Absolutely. So back then there was a company called LedgerX, and they were funded by Google Ventures. I think they got $5 million back in, I don't know, 2013 or 2014. And they were the hot derivatives company for crypto. They were going to fucking crush it. Great pedigree of the founders, obviously Google Ventures, bunch of money in the bank. LedgerX, I don't think they've traded more than $1 billion of flow in the 10 years that they've been in operation. They were a company, they got acquired by FTX. I think they're going to get spit out of the FTX bankruptcy. I say that to say is, they had a vision of what the product should be. They had a bunch of money and they spent the money, and they didn't change the product to fit where the market was. We had no money. We needed to earn it. And so then we had to change our product to fit what the customers are willing to pay for. And then we experienced success. So in some ways, the money makes you continue failing on doing the same thing versus failing doing different things. Now, you could fail completely in both cases, but I'd rather fail trying a bunch of different things versus failing doing one thing, because at least I have a chance of success.
I love that quote. Yeah. Money maybe just continue, you fail in the same thing over and over and over instead of saying, yo, wait a second, This is brilliant. Okay, thank you so much for the questions, Calvin. Look, who are we bringing next for our next question?
That is Abhitash.
Perfect. Welcome.
Hello. Hi, Arthur.
Hi.
Hi, Luna. Since 2016, when you proposed perpetuals with BitMEX, how do you think perpetual contracts have evolved? And particularly in DeFi, what do you think are the more exciting models that you are looking at? So we have DeFi, which is very traditional order book model. Then we had GMX, which brought in the pool side to trade against like a trader. But now, what do you see are the more advancements, or you envision could be some of the advancements in the perpetual contract models, particularly in a DEX model or DeFi?
So, I mean, I think, yeah, as you hit on it, there's an order book model, there's the AMM model. I don't know how much more there is to innovate on that. I know there's hundreds of different projects trying to do little tweaks here and there. The problem is, power law distribution of trading volumes. DY, DX, and GMX have the majority of the trading volume. It's going to be very difficult for you to unseat that if all you're saying is I have a perpetual swap and I'm going to tweak something around the edges. Where I think we need to start thinking about the next stage is, okay, FX derivatives are great. In the TradFi world, they trade $1 trillion a day. The real product that makes the most money for the Chicago Mercantile Exchange is the Euro-dollar futures contract. We need to start trading interest rates. We have, for the first time ever, an ETH staking yield, a native commodity that has its own yield that has no tie back to the dollar or anything in TradFi. ETH just yields, I don't know, it's a 4 or 5%, whatever it is. How are we going to harness that yield to trade and hedge different types of things in an interest rate capacity? This is a lot more complicated, which is why some of these things haven't taken off yet. But if I was to think about the where I want to see more projects offering some innovations, and how do I make trading interest rates appealing for the degen guy who likes going 100x long on perp swaps just for Bitcoin dollar, ETH dollar, or whatever. If I can invest in a project that's going to create that, that's going to make way more money than any projects made to date, because when we start creating a real financial system where ETH and Bitcoin and all these different assets are used to borrow and lend to fund real businesses, and they have yields and yield curves at different maturities, the amount of trading that's going to happen in the interest rate space is going to dwarf anything we've ever seen. And so how do we take that macro thing and drill it down into something that's DeFi native that makes sense for people trading using a MetaMask wallet or something like that? It's not going to be the same as it's trading on the Chicago Mercantile Exchange. We have to make it our version of it that makes sense for us, which is something that, Uniswap and Bancor did with the, X times Y equals K concept product model, right? That's a DeFi innovation. It's not something that happens in TradFi first that we copied.
Awesome. Thank you so much for the question and for the answer. Thank you so much. Who is next? Luke.
Let's go with 9. So let me bring 9 to the stage. 9, so you got 2 questions. Yeah, I guess feel free to ask whichever one you want to ask first.
All right. Okay. Thank you for having me, guys. So I guess I'll start with the first question first. So yeah, I think like Otto, you're basically like a balancing between founder and investor throughout your career and throughout your growth path in life, right? So I'm just wondering what's your approach in striking a balance of like both trying to grow your skill tree and growth in general, and also the bandwidth of handling your own business and also managing the investments of your own portfolio as well.
I don't think you can do both. So I don't actually manage day-to-day BitMEX anymore. I'm on the board. I see, group P&Ls. I don't actually do any sort of managing. So if you want to be a founder and you want to manage a business, that's going to be your full-time job. You don't see, Zuckerberg or any of these guys actually manning their family office day-to-day. They hire people to do that. Now, I like the financial markets and trading and all this sort of stuff. So after I stepped down from my management role at BitMEX, like this is fun. I would rather do this than managing a company of 250 people. I just don't like doing it. I'd rather, have a few people that, bounce ideas off all day about trading and different term sheets of things we want to invest in. So I don't think you do both. You kind of choose which path makes sense. Obviously, you usually have to be a founder first before you could be an investor, because you need capital. If you want to just manage your own capital. So you learn a lot and you fail a lot as a founder. I don't think I'm a particularly great manager, not something I enjoy doing, but now I'm able to do the thing I really enjoy doing, which is investing and trading.
Amazing. 9, you have another question? I think you can go ahead.
All right, cool. Thank you for the answer for this first question, Arthur. And the second question is like, I'm just wondering what your take on the current user acquisition systems, with being the point system, the referrals that is quite prevalent within like prep dexes that you've been discussing thus far. Like, what's your framework or mental models you use to approach like user acquisition or retention, like more broadly as a concept?
Well, you have to make sure that whatever you're paying, you're not paying out too much, right? The people got drunk on just giving out tokens. We saw what happened with Compound in terms of the price as they inflated their token supply too quickly, gave out too much stuff, and then it crashed. If the person is not using your product, if the person's not paying real money meaning something other than your token, to use your DeFi primitive, then you have to wonder whether that's a good customer or not. You have a great product when people were willing to pay for it. So you have to strive to get to that point. Obviously, there's different growth hacking ways to use tokens and rewards to get to that point. But if your goal isn't, I need to make sure that this customer comes on my platform, pays money that isn't a token I've given to them, that should be your North Star, and or organize things around that, but don't lose sight of that.
Awesome. Thank you so much, 9 and Arthur. Look, who's next?
Next is Hal from Commit.
Hello. Okay, here he is. What's up?
Hello. Hey guys, thanks for having me. So the question I have is just wondering, because the perpetual contract is pretty new, so how do you market or sell a product that is that's so new and foreign to people? And is there a key factor to drive adoption?
So in our respect, it was we were trying to solve a problem of we didn't want to answer any more support tickets. So when we rolled out the perpetual swap and the funding rates and all these different terms and things we had to create, our clients hated it. I got so much shit from people, from clients like, what the fuck are you doing, Arthur? Just keep doing the futures contracts. Like, okay, coin, like we don't want this. And even internally, there were people within BitMEX like, no, we should go back to the futures. So I had to hold the line as a CEO, like, no, guys, give me a few weeks. I know that this is going to be a good product for us in solving the problem, which is we don't want all these people asking us all these questions that, don't make any sense. And we don't want to split liquidity across all these different expiries. So it was that goal of this is what we're doing this for. Now, if the goal was we want to make another $1 million immediately, did it work? Then we might not have kept doing it, right? So it depends on what your goal is. So always frame a new product or a new feature, whatever it is, what is it that you actually, the behavior you want the customers to change? And if that's happening or not, then change the product.
Great answer for a good question. Thank you so much for the question. Look, who do we have?
We have Miguel Correz.
Let's bring it, Miguel. Hello.
Hello. I wanted to know more about how you handle regulatory uncertainty, given that you were one of the first, derivative exchanges out there. You launched in something ridiculous first. How do you handle that?
You have to have a certain risk tolerance. Number one, lawyers aren't going to tell you everything because at the end of the day, they tell you what they've been written in the book previously. But I think at a very, very high level, it's like just don't steal anyone's money, don't lie to people, and then if you sort of solve for those two things, then the other uncertainties are a much less severity of things that you're actually solving for. But people who are like, okay, I'm going to figure out a different way to lie to my customers. I'm going to figure out a better way to like maybe use some regulatory gray to steal money from people. I think that's when you get into a lot of trouble.
Okay. I have a question for you. I don't know if you saw the NVIDIA CEO that went online and said that if he had to do it all over again, he will not actually start NVIDIA because the pains and the tribulations and eating glass for so many years, now he doesn't think it's worth it. Obviously, it's a little bit opportunistic and doomish to say that because I think he will do it now knowing that NVIDIA would work. The real question is, would he do it without knowing that NVIDIA would work? Because there's a lot of glass that you have to eat. So the same question for you. If you had to do it all over again without knowing that you're going to succeed, would you do it again?
Absolutely. The crypto, I think this is the only opportunity that I've seen that has such a wide possibility surface area for somebody who, admittedly doesn't really have any real skills. I can't do any programming. I'm not a doctor. I'm not some like very smart physicist or somebody, right? I went to school, did a bunch of basic calculus and can do a bit of trading, right? But now this crypto ecosystem opens up. Let's just rewrite everything we wanted to do as a human civilization in a financial sense using computers and logic. It's so interesting and so fortunate.
I think you're being very humble. I think that if you were to put your mind on anything else, we will have a change. If you started making dog cookies, dog cookies will become something else. We don't know what they will become, but they'll be something else. What other question do you have? Luke, do you have anybody else?
Yep, we got Andrea.
Hello, welcome.
Hi, thank you. This is excellent. Thank you all so much. A quick question about the viability of maybe some of the other exchanges, especially maybe an exchange to rule them all in that. So today I was pitched an exchange. So I work for a Hong Kong family, and we were asked if we wanted to make a play into a all-around exchange that trades at all times, whether it's commodities, crypto. I just don't know if there's even legs to this. I was wondering if you could speak to the viability thereof. Thanks.
Yeah, exchanges are tough. It's a two-sided marketplace. If you are going to come into, if someone said, I want to create a new Chicago Mercantile Institute, every single product that the CME does, but I'm going to do it better, I'd say pass, right? What's your special sauce? Is it, I'm going to change the fee model? Is it, okay, people are connecting using fixed, I'm going to use something different that is better for worse for some reason, or I'm going after a new client base that everybody's ignoring, and I'm going to use that as my toehold and then go on other products. But I guess, but I'm going to build the best exchange ever, and I'm going to do the same product to do it the same way. But I don't know what's the but? What's the unfair advantage? Why was I able to start an exchange in crypto? Because nobody else was doing it. If the Chicago Mercantile Exchange was trading Bitcoin back in 2013, we wouldn't have any of these exchanges because they have more money, more tech, more people, and they would have been able to crush all of us. It's the only reason we exist is because none of the other TradFi players want it to be in this ecosystem, or they don't want to custody crypto assets and all the issues that come along with that. So it's you have to have the opportunity set to be able to create your, cash cow to then go and try to attack other people's businesses. But just going out and saying, I'm going to do the same thing as everyone else, I would say is destined to incinerate investors' capital.
Awesome. Thank you. I have another question that I want you to answer, but I have something else that I want to mention. I know this is something branding-wise, which again is my expertise, but you work out a lot, and you've made working out and staying fit part of who you are and part of your brand as well. I always work out, so I have a tendency to believe, trust, and want to work with people that work out, because I think that there is a self-discipline and a self-love that you show by doing this. Staying healthy and working out, what does it mean to you?
Well, I process stress better. For me, it's an outlet. I get to think about certain things and mental clarity. I just love doing it. Obviously, I think whatever it is, you have to have a hobby outside of work, because again, if you're going to be creative in whatever the vertical it is, you need to create something that doesn't exist today. And that means doing things in an unstructured environment that are different. If all you do is read the same book, you're not going to come up with a creative idea. If you're doing different things and different, whatever it's working out or reading different types of books, listening to different types of music, and you're not focusing on the thing that you want to be successful in, you're going to come up with better ideas. So obviously I don't work out because I come up with better ideas. I work out because I like doing it. But at the end of the day, having that mental space to think about other things, I think is extremely valuable. And so find something that is not related to your full-time job that you enjoy doing. And it makes you a more interesting person. If you're a salesperson and you need to be out talking to people, you don't want to talk about crypto derivatives all day. Let's talk about shredding powder or going skydiving or my squash shot or whatever it is, right? It just makes you a more interesting person.
Do you see other founders that find time to work out and live healthy lifestyles as a net positive that will make you more likely to work with them, or it's not something that you quantify as EV?
It's not really something that I've selected for.
Okay. We have a next question from Jim. Welcome, Jim.
Hello.
Hello.
Hi. Here. Oh yeah, hi. Thanks for having us today. It's a great session. I actually just wanted to ask. Actually, I have a few questions, but just very simple questions around the whole trading aspect of things. Obviously, you being a creator of a derivatives exchange, I wanted to ask, like, do you yourself trade derivatives like on leverage, or are you mainly just like spot? And also, like, what is your usual like time frame in trading? So do you look at things more like I mean, you did mention today like a 1 to 2 year, but considering that as a short time frame, but do you have like shorter positions that you use? And also, like, the entry into positions, is it more based on just macro or fundamental analysis, or do you actually use technical as well?
So I don't trade full time. Meaning my full-time job isn't trading. I like to trade. So I don't use leverage. I seldom use derivatives unless there's some sort of hedge I need to put on or something like that, because I'd rather spend most of my time in the ski resort. I don't want to think about what's going on in the markets. And so I size my positions accordingly. So if something goes down 75%, I don't care. Right. And so if you approach it from that way, I'm not trading on short time frames. I'm not seeing like a 1-minute candle. There's nothing wrong with that. It's like, if you want to day trade and use leverage, then that is your job. You need to set up your trading station, be present, not be doing anything else. Don't think you can just like open up your phone, from 2 hours when you get off of work and think you're going to make money doing this sort of thing. It's got to be a dedication, and you want to do it. I've done it before, and again, you're on all the time. I just don't want to do that now. So that's kind of how I approach my trading right now. And so it's longer term. That's why I write articles. I want to take a position. I'll hold it for 3 months, 6 months, whatever it is, based on my thesis. But I'm not going to get, liquidated because I used a bunch of leverage and was away from my phone for 15 minutes.
Yeah. Okay.
Okay, thank you so much. We're gonna bring Calvin again because there's a popular question that is going around in the chat. Calvin.
Hello, hello. Long time no see. One of the questions I have was because I think Arthur, you mentioned putting yourself out there and putting a lot of willingness to get the criticism from the community and the audience when you share thoughts. So I think one of the things that gets us really excited when we read some of your long form posts is some of these hypotheses that you have. So I'm curious how you test them and how any types of feedback loop type of mechanisms that you thought about while at BitMEX.
I mean, you test if it's a product, then you test the people using it. If it's a trade, are you making money, right? Just being honest, not saying, oh, I'm not going to look at that variable because for whatever reason, mark yourself to market all the time. That's a great thing about trading. There's a P&L right there that tell you if you're right or wrong. Either the event happened or it didn't. Of course, you want to investigate the why and understand that in investing, it's better to bet more on the thing you have more confidence in, but be wrong 99% of the time, than bet a lot across a bunch of different outcomes that you're not that confident on. So I don't mind being wrong more than I'm right, as long as I bet and size my positions on the things that I'm super, super confident on.
Okay, Arthur,
Maybe,
the last question.
can I counter that actually really fast?
Yeah, go ahead.
Then how do you size bets on things that you're not necessarily confident in, but you're more confident than the rest of the market? So maybe it's a low probability thing, but you just think it's not as low as what other people think it is.
Yeah, so then you have to make sure that what's your carrying cost of that position, right? So if classic optionality, I invest in a vol hedge fund, and their strategy is they want to make money on something that goes from never could happen to maybe happen. That's where they make all their money. When you invest in maybe happen, definitely going to happen, you make less money. So, but that's just being long convexity and long optionality and doing it in the cheapest possible way. If I can get to a position that doesn't cost me any money, but no one believes it's going to happen, but then a few people believe it's going to happen, then the price is going to jump massively. Doesn't mean it's going to happen. The probability just changes, right? A 1% probability to a 2% probability is a doubling, right? So that's how I approach that.
Thanks.
Okay, Arthur, we have the last question that I have for you today. Predictions. Have fun with this. What do you predict? You can predict anything you want, What do you think?
I mean, of course, from the crypto, what if people want to know? Price of Bitcoin end of 2024, 70,000. Is a Bitcoin ETF going to happen? I would say yes. When? I don't know. What else?
You're an ETHMAX. What do you think ETH is at the end of 2024?
5,000. I think the bull market, this is the choppy phase of the bull market. It's not, everyone's kind of, no, it's not really happening. I don't want to get involved. And once we get into 2025, there's a lot of elections this year. There's a lot of politicians are going to have to print a lot of money to make people think that they can do something. And so that's all really going to show up 25 and 26. So I think now is, if you want to get in now before things get too crazy, this is going to be the calm period. It's going to be a bit choppy, we could go to 50,000 to 30,000 up and down, but that's kind of my prediction.
Your prediction is we have a 2024 and then crazy waters after 2025?
My $1 million Bitcoin prediction, that's kind of like a 2027 kind of thing. But, this year we're not going up that much. I mean, I hope we do, but I don't think so. So 70,000 for Bitcoin by the end of 2024.
Amazing. Well, Arthur, I really want to thank you personally for being here with us. I really wanted to show who I saw you being, this thoughtful and caring and really wonderful guy. And I really think that sometimes when I see your Twitter, I'm like, dude, there's a different dimension to many of these things. And again, thank you for your writing. Thank you for you being you. And thank you for the times that you have spent with me, talking to me about this cool, interesting stuff. If you have any final thoughts, final plug-in, or just hellos that you want to
No, I mean, this is super exciting that you guys are doing this and that there's people who are building new things, because at the end of the day, that's what this is based on. I just want to see cool shit happen.
Yes, so do we. Thank you so much, Arthur. For everybody that is here, we are after this meeting, we go to another thing, which we all get to talk one-on-ones and in little groups of threes. So if you want to meet other people that are assisting this conference, please join the link that will be dropped in the chat. Arthur, thank you so much.
Thank you, guys.
My friend, and I'll see you around.
Bye, guys.